we're a REIT mainly focused on retail shopping centers in the Southeast, Southwest, lifestyle centers, power centers, and grocery anchored centers. We're a higher yielding REIT, almost a 9% dividend yield, cheaper REIT as far as discount to NAV. That's because primarily of our size. So we like to think of ourselves as a fast growing, little known retail oriented REIT, primarily focused on Southeast, Southwest. So the company is over 100 years old. Primarily, it was a land holding company in Florida. When I came on board about 12 years ago, the mission was to basically extract as much value out of the company as possible. And the land trading as a C Corp was trading at a big discount. So we sold the land, we converted into retail properties in fast-growing cities and converted to a REIT over 3 years ago. And so we're not as well known as other companies, but we feel like that's an opportunity as well. Well, the reason we chose to invest in retail, we could have chose any sector we wanted to when we were selling the land. We chose retail because we like the risk-reward dynamic. You're able to buy properties at sometimes half of replacement cost and higher yielding than some of the momentum plays such as industrial and multifamily. So we're really happy with kind of where we've invested our money, and that's, that shows as far as our dividend yield being close to 9%. And so the fundamentals are very strong for our portfolio in that no one's building retail right now, and our basis is very safe. So we like the supply dynamics where there's no supply, and there's a strong retailer demand in leasing the space. Well, I mean, the good news is since we've been a little bit contrarian buying these properties really where that's been de-risked, we don't really have too much to worry about. Our debt is in good shape, lower leverage around 50%, and we've basically swapped out and the interest rate risk. So we're in good shape. One thing I would worry about when we follow the trends is whether leasing dynamics have changed, which is the good news. Retailers are still very strongly interested in leasing space. If that were not the case, that would keep me up at night. Well, we have the disadvantage of being smaller, but that's also an advantage for us. The disadvantage is a lot of the larger investors, institutional investors, can't invest in us because of our size. But that allows smaller investors an opportunity to invest in a faster growing, more nimble company. So we're very fast to act on acquisitions that we like, and brokers know that they can get fast answers. You can call the CEO, myself, and get a reaction rather than having to go through multi-layer process at larger entities. So that is our advantage. So one acquisition for us really moves the needle, whereas larger companies really have to do hundreds of millions of dollars to have the same impact as a $25 million acquisition for us.